Hey there, guys. It's June. It is time for another Tustin Talks. This could be a little different format because we have our editor traveling right now and moving, and there's just a bunch of stuff going on. You know how busy these summers are, right? With graduations, weddings, all that kind of stuff. So we're giving her a little bit of time off, and we are going back to recording this in a Zoom format. So it's going to look a little different, not as fancy with all the animations, but we're going to still have the same great information. So with that, I'm going to share my screen with you guys. And let's get started. Let's just talk about what a normal market looks like, right? This is what happens in a normal market. That top line, you look at the supply for this time of year, it's increasing, the demand is decreasing, and the market time increases, right? Now, the reason the market demand starts to decrease is because, believe it or not, activity is most busy in the spring market, and the spring's over. We're going into summer now. So what happens normally is we will see supply increase. If you look at the 5-year average, you can see how that normally does. We get about another 9% increase in homes over the summertime, while the pending sales or the demand actually goes down during that same time period, and the marketing time goes up. So we're hitting this tipping point of the spring to the summer market. So we are going to have to see where things go. But based on history and based on current numbers, we would project that the summer market will have somewhere around, you can see the number there, almost 2,400 homes. The demand will be somewhere around 1,553 pending sales, and our marketing time will go up to more like 46 days. So let's go to the next slide. Let's look at the active listing inventory, what's going on right now. We look at where we are today. We are at 2,196 homes. That is the blue line. You'll see that it's actually intersected with the red line. So it's almost the same as it was last year right now. Excuse me, I said last year, I meant 2021. In 2022, which was the orange line, you could see listing inventory was much higher. And you can see where we were 2 weeks ago and last year. And there's that last year number for the orange line, 3,059 homes. And where were we pre-COVID, 3-year average? 6,501 homes. So you can see we are still constrained on inventory. So if we go to the next one, you'll see the Orange County demand. You'll see that our demand today is 1,595 homes and dropping. 2 weeks ago, it was 1,665 homes, and last year it was 2,020 homes. So the 3-year average prior to that was 2,766. Now this drop in demand, like I showed you on that first slide, is normal for this time of year. It's just that we are so below historical averages, right? Now we can blame that on high interest rates. We can blame that on the fact that there's no inventory, but we're going to talk about some things we're starting to sense in the market or see in the market that you guys are going to want to know after we finish these charts that maybe contributed to this demand issue. Okay. Now let's look at Orange County marketing time year over year. Well, today, 41 days. 2 weeks ago, 39 days. Last year, 45 days. So believe it or not, our market's actually a little faster than it was last year, because that ratio of supply versus demand, is still better than it was last year. Because if you look at that orange line, last year, the expected marketing time was going up because we had inventory climbing at that time, right? Look at the 3-year average, it was 71 days. We look how that all fits into the chart above where it talks about what's a buyer's market, what's a hot seller's market by the number of days. You can see bottom line is we have been in either a hot seller's market or a slight seller's market for now 3 years. Okay, so it's been frustrating for the buyers, I know. So what's going to change that? What is going to change the market we're in? Well, first of all, let's look at how we look at the market speed by price range, because every price range is a little bit different. Okay, so you can see the speed of the market, 28 days in the up to 750 range. And if you go down, you can see how the days normally climb as the price range gets higher. And if you compare that to last year's numbers, you will see we are actually starting to even out at like that 2 million and above range, right? 76 days now, last year, 77 days, 4 to 6 million, 163 days. Last year, 144 days. So if you look at last year's time versus this year's time, It's actually faster this year than it was last year, like we spoke about. So where's that dividing line right now in Orange County? At about $2 million, where you're starting to really kind of sense a change in the market and a slowdown a little bit. Okay. We're going to move on to, my advice for buyers and sellers. So, I start my day, you guys, just kind of looking at just all kinds of economic data, right? And trying to figure out where this market's going based on my 33 years in the business, based on what other experts are saying, based on, economic data, all these things. We look at these things constantly. And the reality is I think for anybody who's been around a long time, they're very surprised that this market's held up as long as it has. And the reason it's held up as long as it has been because of the lack of inventory. So the reality is, what is going to change this lack of inventory? What is going to cause people to put their homes on the market? We know people are locked into these low rates, and that's great. That's really great. They should stay if it's the best thing for them. But just realize that this doesn't last forever. And we do feel like we're kind of have reached this plateau or point. We saw prices drop down a little bit, and they went up in the spring market like they normally do, but we're kind of butting up against that, high dollar value now, like top dollar, plus interest rates have climbed again. So, if you've watched this before, I've always said that prices are going to follow interest rates, and that's kind of what's going on. So then the question is, what's your belief in interest rates? Do you believe that we're going to go down in rates, or do you think we're going to go up in rates? Well, if you listen to industry professionals, most of them don't think that we're going to see a dip in rates for a while. Okay, it's going to be a while. And the economy is getting tougher for most businesses. I always talk to people in their businesses to see how they're doing. I don't have anybody telling me that their business is great right now. Everybody is noticing a pullback. Everybody is noticing a slowdown. If you look at the economic data out there, it's going to tell you the same thing. Things are slowing down. It's a trickle down effect. It takes a while for it to happen. Home Depot's numbers were off, right? All kinds of different industry numbers are off, whether it's cars, whether it's this, whether it's that. These short-term rates, long-term rates are starting to take effect. People are not consuming like they were consuming, which is exactly what the Fed wants, right? It looks like we're probably going to head towards a recession. And when we come out of this recession, housing usually leads the way and things get better. But between that point, which we're officially in the recession, and when we officially come out of the recession, that stretch of time is not going to be advantageous to sellers, okay? Because there's people that are going to be in a pinch here. They're going to have to get out. Maybe they lose their job. Doesn't matter how low their interest rate is on their house. If you don't have a job and you can't make your payment, you got to sell your house, right? So if anybody's been waiting for that tipping point in the market, based on what I'm seeing, based on my experience, I feel like it is coming. It's not, I don't feel like it's going to be some drastic, huge crash, but like I've said on this program before to sellers, if you were looking for if you were looking for optimism in the market on the behalf of the buyers, that time is really past. Most buyers are very cautious right now. They want to make sure they still feel like they're getting a fair deal, and they want to still know that they're buying for the long term, because no buyers are out there right now thinking they're going to flip properties, invest in properties, move in 2 or 3 years. The people that are buying now, they're thinking they're going to be in this house for 5 to 10 years, and they're hoping that they're going to get a chance to refinance these higher rates. Okay. So if you guys put pen to paper and see what it really costs for someone to buy your house, you'll understand this better. The last thing I want to say to sellers, despite all that's going on out there and the lack of inventory, there are a lot of private sales going on. We're getting calls all the time for off-market sales and stuff. And even though when we tell our sellers, hey, the best way you'll really know how to get top dollar is to put your home on the market, we know that's not for everybody. Not everybody cares about getting every penny out of a house. There's some people that own their house free and clear. They just want things to be easy. They think they can just call an investor and they're going to somehow come out better from that standpoint, even though the investors are flippers and in the business of making money, right? So they're not the best buyers. We have the best buyers. We know other people that have the best buyers. So sellers, if you are thinking about doing something like that, please call us, because I've been getting more and more calls like that. And we are starting to sell more and more properties off market. Again, not what I recommend to get top dollar, but for everybody, that's not the most important thing. People just want things to be simple. And buyers, I know what you guys are doing now. You guys are looking out there. You're not jumping on things. You're sitting back. You're watching the market a little bit. And I think that's prudent. I think that's good. And the advice I would give you is to continue to do the same. Do not buy for fear of missing out. Buy because you feel like you found the right house and you're willing to stay there a long time. and you should get a chance at refinancing when rates drop. Will that be in a couple of months? Probably not. Will it be in 6 months? Who knows? Could it be in a year or two? Most likely, it's very hard to say. Nobody's got a crystal ball, but the reality is just be prepared for the payment that you commit to for a while. And if you get a chance to refinance, that's a bonus. So I just want to make everybody aware that we feel that there is definitely a turning point coming in this market. And so if you guys are ready to make a change one way or another, buyer or seller, we want to be the ones to help you and advise you properly. Give us a call. You can reach out. As far as this video goes, please like it, share it, and we'll see you on the next Tustin Talks. And we'll probably have one more of these Zoom ones. It's not the fancy stuff with the graphics, but if you're listening up, you're getting the same great information. Okay, bye-bye.